In the previous class, we have discussed about the concept of books as well as linking books to fixed assets, and also we have discussed about the uh, posting profile creation, how to create a posting profile and link it in the parameters of fixed asset parameters, how to link it. We have discussed this earlier. So the main account that are related to different transactions of fixed assets and how to and how that will be how entries will be posted will we just have noted down earlier, and we'll see how it will be performing once we post any transactions on fixed assets further. So before that we go for acquisition of fixed asset. Today let us discuss about how many ways that we can acquire a fixed asset into Dynamics. Hmm. And how many ways that we can dispose a fixed asset, disposal in the sense sell a fixed asset. I'll just write it down. Acquisition of fixed asset, or else I'll just option acquisition of fixed asset, and this is disposal of fixed assets. So we have a journal called as fixed asset journal, through which we usually perform all the transactions of fixed assets like acquisition or sale or depreciation. We can do anything. So this is, yes, you can also dispose it through it. Then invoice journal. So you can, yes, buy a fixed asset through a vendor invoice journal, acquire a fixed asset through vendor invoice journal as well. But you can also sell, but we don't sell it. So for disposal of fixed asset, we have a separate invoice, so free text invoice, through which we can sell it to a customer. If at all we have to sell a free text invoice to a customer, sorry, if at all we have to sell a fixed asset through free text invoice to a customer. So purchase order invoice, yes, and here it is now. Then free text invoice, so it is no, and it is yes. Then general journal, through general journal you can literally do anything. You can post any kind of transaction through general journal, but not most of them will use general journal for posting fixed asset transactions because they separately have a journal called as fixed asset journal. Then we have inventory to fixed asset journal, which is used to convert the existing inventory in the books to a fixed asset. So we'll also see that we can acquire a fixed asset through inventory to fixed asset journal, which means we can convert the existing inventory into a fixed asset. And disposal we could not do. Again, through project accounting and management also we can do different options, and can acquire fixed assets through multiple options, and you can sell fixed assets using different journals. So we'll see each of them, how to how to acquire fixed assets and how to dispose fixed assets using these different options. Okay, once you get used to this, you can perform anything in fixed asset operations actually. So then let's see how we can procure or acquire a fixed asset through a fixed asset journal, and then how to create a fixed asset journal first, then how to acquire or post different transactions for fixed assets through fixed asset journal. So we are going to discuss about acquisitions as well as depreciations and then the disposals. In case if time permits, the other transactions, miscellaneous transactions like write-ups and write-downs, we'll also see them. Okay, first let us discuss about this part about the acquisition of fixed assets through fixed asset journal. So in order to acquire or post any other transaction to a fixed asset using fixed asset journal, first you need to ensure that a fixed asset journal is created. So to create fixed asset journal, again, you have to go to general ledger module. So in the general ledger module, you have journal names where you usually create journal names for various purposes. We have created many of them. So in general ledger under journal setup, we have journal names. Let's go to journal names. Here we have a lot of journals. I'll create a new journal for fixed assets. VFA. Journal. Fixed asset journal. Then journal type is important. Journal type is post fixed assets. It is here. Post fixed assets. Then voucher series is compulsory, which you can configure here. Go to view details. New company specific. Here. Then remove the company. Then I'll give it as FAJ, fixed asset journal. 69%, keep it continuous and save it. Okay. Okay, send this here. FA journal number sequence. And when you see it here, the posting layer is into current layer, which means this can be used for posting the transactions into current layer or the current layer page, not into the tax layer. But since you have associated your derived books also to this particular current act book layer, so I think the tax act transaction also get posted. But for posting tax act transactions, you can create a separate fixed asset journal if you want to. So for that, I'll create one called as FA tax journal. So assets tax act journal or IT act journal. Okay. Then the posting type is also same post fixed assets, but voucher series, yes, we'll define one new voucher series for that. Tax journal, just give the name as is company Ariel. Remove this and give a constant value here as FATJ fixed asset tax journal. Change it to 6 and keep it as continuous and save it for tax journal. Okay, then I'll give that here for tax journal. I'll place it here, the number sequence, and the most important is posting layer. Since using the tax act journal, you post the transactions into tax layer and not into the current layer, you can change the journal posting layer as tax layer. So you have two different journals now, one for companies act, one for tax act. So let's see how we can use both of them for posting different transactions on fixed assets into different books again. Okay, now I'll just go to fixed assets module in order to post a transaction. Fixed assets, and fixed asset journal is here. Fixed asset journal entries and fixed asset journal. Before that I post any journal, I'll show you what kind of fixed assets we have here. So I just go to fixed assets module, fixed assets menu to see which fixed assets we have created already. So if you have to acquire a fixed asset, first you have to ensure that a fixed asset is created here in the list of fixed assets. So we have two fixed assets called bench truck and bench truck number 2. And we have to ensure that the books are linked to the fixed assets. So for this Benji truck, which I've selected, we have the books associated to it, Companies Act book and Tax Act book, and a posting profile is linked to it. An acquisition date is given as well as acquisition amount of 1 lakh is given here. So it is up to you to post acquisition entry on whatever date you want, as well as you can also change the acquisition price. Automatically, when you post in the journal with a different price, that will be updated here. So I'll acquire this fixed asset for 5 lakhs. Let's see, the acquisition price will get updated over here in the books. Okay, so I'll just go to fixed asset journal here, fixed assets journal entries and fixed asset journal. So I'll just create a new journal, select the name, which journal you want. So I'll selecting this journal, which is for the current layer or for the Companies Act fixed asset journal. Fine. So I'll just go to lines here. You can give description if you want to change it. You can. Rest all the same common menus that we have in other journals. There isn't any difference. So here it is. So for which date you are going to acquire the fixed asset, I'll acquire it for the 1st of January. Okay. And the transaction type, what kind of transaction that you are posting on the fixed asset, acquisition or acquisition adjustment, depreciation or depreciation adjustment, or any other transaction that you are going to post. Up to you. You can select any of them, but here for our purpose, I'm selecting acquisition since I'm going to acquire the fixed asset. So if you have to post any other transaction to the fixed asset, first you have to post acquisition. Acquisition is a primary transaction. Without acquiring a fixed asset, you cannot make any adjustments, right? So acquisition is a primary transaction. So I can select the list of fixed assets I have, which that I have to acquire. In the account field, I can see fixed assets. Normally in the vendor invoice journals, you will see vendor list in the account when you drop down it. But here in the fixed assets, you see fixed assets. So select a fixed asset. You can select this fixed asset Benja truck to acquire it. Vehicle number 1. So as you select it, you will see the name of the fixed asset and the book associated to it. Since you have selected the Companies Act journal, or the current layer journal, automatically the current layer book will appear here. CA book means Companies Act book. Companies Act book is linked with current layer. You can also select any other book, but it won't show you because if there are multiple books with current layer, it will show down here. But there is only one book with current layer, which is how everybody will maintain. So that book only will be reflecting. But as far as I remember, we have linked derived books to this particular book. Derived books for the entry of acquisition, at least we have linked it in the books page. So that books you can see here in this menu. So this, how many derived books are linked or how many other books are linked to this particular book, you can see here. See the Tax Act book on the local gap book, both of them are linked to this particular book here in this book. So whenever you are posting acquisition entry in this book, Companies Act, automatically that will get posted into these two books as well, local gap book as well as Tax Act book. Okay, which means the asset will be acquired in this both of these books as well along with this book. So since you have linked it in the derived books. If you want to remove the link here for this transaction, you can remove it. Select the book and remove it, and select this book and remove it. You can do that. So which I'm going to do it now. I just remove these two books from here. Let's see, it's removed. If you want to add once again, you can add it. Like you can add local gap again, and you can add Tax Act book again. So we'll just go back and then enter the details, other details here. Companies Act book. You can add a description if you want to. And when I am acquiring the fixed asset, will the asset be debited or credited? Asset is always debited. So I am debiting this asset for 5 lakh. Okay, 5 lakh dollars. I'm buying this asset with 5 lakh dollars. Okay, then offset account. You can select the cash account as an offset account, or you can select bank account. You can select. See, if you want to select bank account, you can select bank and can select through which bank you are buying it. Or if you are buying it from a vendor on credit, let's say suppose you can select a vendor and select the vendor account. Suppose if you are buying it from Tata company, let's say for example, so vendors are usually comes up with invoices. But here you don't have sufficient details to fill the invoice number or to assign the methods of payments and discounts and all. That is why we have another option to acquire it from a vendor using vendor invoice journal or purchase order invoice in case if you are acquiring an item. We'll see both of them after a while. So in this journal, I usually you can also select vendor account, which will create a kind of invoice transaction for the vendor. Since you are crediting the vendor here, vendor balance will show up in the accounts payable under the vendor. So you have to make that payment to the vendor and settle it. So eventually, accounts payable account will get settled once the payment is done. Then the final entry remained is bank account asset account will be debited, and when you make the payment, bank account will be created, right? That will be remaining. So that's how. So you can use any account here, either the bank account or cash account. So here I am using bank account, or can also use vendor account as it should do. So I'm debiting the asset account and crediting the bank account to buy this fixed asset. So what I wanted to show you is in the fixed asset posting profile, this one. So for the acquisition, for Companies Act book, we are acquiring vehicle, right? See, the main account that we gave is fixed asset vehicles account, which is an asset account. We link it to the this particular group and fixed asset group and a fixed asset book. So this account will be debited instead of the fixed asset account, whatever you gave here in the main account place. So but offset account we did not give, right? So we are giving offset account here in the journal itself directly as a bank account. But however, for the tax act book, we have already given an offset account because this is since we have linked the tax act book here in the derived books, automatically this account plus main account plus offset account both are picked for the voucher. If you don't give this offset account here for the tax act book, since an automatic transaction is being posted for tax act book, it will not post. It will ask for the offset account if you miss it here in the posting profile. That's the concept. So you can give any dummy account rather than cash account. You can maintain any account since tax layer transactions are not really balances are not really considered, but just the fixed asset balances are considered. Okay, only in the fixed asset module they refer the balances, but not the original account balances. These are all for the sake of maintenance only for the tax act. So you can give any other offset account. So here in this situation, I gave cash account since it's a relevant account. So let's see what happens. Now you can validate this transaction and you can post it. So I'm validating this. So I'm acquiring it for the 1st of January 2022. See, journal is okay. That's what it is saying. And you can post it further. So you have one book linked and as well as you have two other books linked in the derived books. So let's see if I am expecting that transaction or the acquisition has to be posted in all the three books at a time. So I'll post this one. So it's posted journal. And if you want to see the voucher for this, what the voucher is posted for the fixed asset acquisition, you can see it here, voucher. We'll see two vouchers actually, one for Companies Act and one for Tax Act. See here, this one which is posted into current layer. Posting layer is current means this is the transaction that is posted for the Companies Act book, and this tax layer transaction is posted for the Tax Act book. So both of them will not collide since they are being posted into two different layers. But you can see the entry here. So in the Companies Act book, fixed assets account is debited for 5 lakhs and bank account is created for 5 lakhs. Since those are the two accounts we have selected. Behind fixed asset account, this one lakh 60,000 account is taken. And the financial dimensions are taken from the book level of the fixed asset. When we created fixed asset under the book, we have given this dimensions. So from there, it took the financial dimensions by default. For the tax act book, we did not give any dimensions, so it did not consider any dimensions. But here, and the bank account, since we have given it in the offset account here, in the journal actually, sorry. So we have taken, it is taking it. Coming to this one tax layer transaction, it is also posting into tax layer with the same kind of entry and the same amount. The main account is considered from the posting profile from here, tax act vehicles, and offset account of cash is taken from here. See here, cash account 1 lakh is taken from there. So that's how this entry is posted into both current layer and tax layer. Since the derived books is associated for acquisition transaction, so automatically it got posted. What about the other book, local gap? Why we don't have any voucher for it? It's because in this particular book, we have disabled a parameter, this one, post to general ledger. If you disable this parameter, the posting layer will become none. Means it will not post any voucher when you make any transaction in this book. No, no voucher will be posted if you disable the parameter post to general ledger. But for other books, you have this parameter enabled post to general ledger, and posting layer is selected either as current layer or tax layer for the other two books. So that is why it is being posted into general ledger into different layers. But here, since it's disabled, it won't post any voucher. Financial voucher is not posted. Only the transactions in fixed asset module are posted, but the voucher will be skipped. No impact on the accounts in any layer. That is why it shows as acquired for the local gap as well, but no entry will be there for that. So we'll see that how we can check those entries. So now this journal is posted. We will go and check if the fixed asset is acquired or not. Here I am going to the same fixed assets once again. I'll go to the same bench truck which we have acquired. Let's go to books. So in the books, in the Companies Act book, you see the asset status changed to open. Earlier it was not yet acquired. So earlier the status was not yet acquired. Now since you have acquired it, automatically it goes into open status. Other than that, you have suspended, you can temporarily suspend a fixed asset book. Okay. If you want to suspend complete fixed asset in all the books, you have to change the status in all the three books as suspended. Okay, suspended in the sense if there are any discrepancies, for some days you can suspend and clear the discrepancies and then unsuspend it. Okay, or you can there is an option called as closed, means once the depreciation is completed on the fixed asset, all the depreciation that has to be run, so asset will become closed. Sold and scrapped means when you sell a fixed asset, it will show the status as sold, and when you scrapped it, it will show the status as scrapped. That's all. Then you can see here the acquisition price automatically changed. Earlier it was like 1 lakh, right, which we have entered, but it automatically changed to 5 lakhs since we have changed it in the acquisition journal. We acquired it for 5 lakhs, so automatically it is changed to 5 lakhs. Okay, and acquisition date is 1 for just 1st January 2022, and let the placed in service also be 1st January 2022. So that depreciation will be calculated from the same date. And we have given a scrap value here as 10,000. That's okay. So on the rest of the 4,90,000 depreciation will be calculated. 10,000 will be left over as a scrap value. Or if you want to increase scrap value, you can do that. Generally in business, 5% is maintained as scrap value and not more than that. So if it is 5%, it should be 25,000 right here. So we'll give the same actually, 25,000. And on the rest of 4,75,000, depreciation will be calculated as is according to the depreciation profile that is linked in here. We'll just copy the same and apply it to the other books as well. In the local gap, when you see it, here also the asset shows as open, which means acquired. And the same values, here I'll give the scrap value here as 25,000. And in the Tax Act book as well, we have the asset acquired and you can see the status as open. Acquisition date and amount is 5 lakhs. And you can give the scrap value here as well as 25,000. Save. Now, if I go to Companies Act book here, as you can see, just clicked on Companies Act book. You can also see the transactions. Click on transactions. It will show you the acquisition entry. On 1st January 2022, acquisition is posted for 5 lakhs. If you want to see the voucher, you can click here on the voucher or you can click on the details here. Click on details and it will show you, since both of the transactions are under the same voucher, it will show you this one, Companies Act transaction as well as Tax Act transaction. Okay. And you can go back and check the balances here for the Companies Act. The balance is 5 lakhs. The acquisition balance is 5 lakhs. And the net book value, current net book value is also 5 lakhs since there are no more adjustments here done. So what for how much amount it is acquired, it will show the same amount of net book value. Suppose if I go to local gap and go to transactions here, say I see an acquisition one, and if I go to details, so I don't see any voucher for the local gap. This is the voucher for only current and tax. So it is acquired under the same voucher number, but there was no voucher or the financial entry posted for the local gap. That's how. So again, you can see the balances in the local gap as well at the same 5 lakhs. So this is just a dummy representation without any financial impacts. The Tax Act book, you can also see the transaction. It will be the same transaction actually since it is linked to derived books. So acquisition 5 lakhs. Asset is acquired for 5 lakhs. You can also see the profile. In the profile, it shows how the asset is being depreciated over the year and through different months. So 4,75,000 is the depreciation base rate. 5 lakhs minus 25,000 scrap value. So here accordingly it will show you the depreciation. So it's reducing balance 20%, I guess, in the Tax Act book. So I'll show you the calculation quickly. So it's 4,75,000 is the base value. 5 lakhs minus 25,000 net. Then reducing 20,000 means into 20%. It is 95,000 per year for the first year at least. So 95,000, sorry, 95,000 divided by 12. 7916.67. So 7916.67. For the first year, 95,000 is divided by 12 periods. So for each period, it is apportioned equally. 7916.67 on monthly basis. So for the complete year, it will cover total 95,000 depreciation. Okay, once if you remove 95,000 from 4,75,000 for the next year, 4,75,000 minus 95,000 is depreciated already, let's say. So 3,80,000 is there. On 3,80,000, again 20% will be calculated, 76,000. So 76,000 will be again divided by 12 for the second year. 6333.33. Here you can see 6333.33 for the second year completely. Total 38,000 of depreciation is divided into equal parts for the 12 months. Again, in the next year, you have some reduction. Again, you in the next year, coming year, you have some reduction and reduction. So since it is the reducing value method or reducing balance method, you see the reduction in the depreciation value year by year comparatively. Because the net book value is also getting reduced, right? Because of the depreciation that is removed from the net book value. So accordingly, the depreciation is valuated. So that's the thing with these three books. And if you want to see the other valuations of the fixed asset, you can go to fixed asset here and click on valuations here. It will generally show you the valuations of fixed asset in all the three books. So fixed asset Image also you can see this is taken from the master level where we have linked the image. Here in the Companies Act, you can see acquisition 5 lakhs, local gap acquisition 5 lakhs, tax book acquisition 5 lakhs, and no other entries. So net book value same, same and same. That's all. So did you guys understand the logic clearly enough? Maintaining different books and how the asset entries are being posted in case if the post to general ledger is not enabled, so how it is being posted and all. If you just click on this acquisition, it will take you automatically to the acquisition entry, what is being posted. That's all. So if this is clear, let's go and acquire the second asset as well. This time what I'll do is I will acquire it only for one book. I'll remove the other two books from the link of derived books in the journal level itself, and then we'll see what happens. Okay. So I'm going to fixed asset journal again, create a new journal, which I select fixed asset journal again, the original current layer journal only. I'm going to lines. So the transaction date is January 1st itself. Same transaction type is acquisition. I'm going to acquire the other fixed asset, Bench truck number 2. Okay. Then I'll give the debit value again if it's 5 lakhs. This is a new vehicle. So I'm buying it for 5 lakhs and I will use the offset account as bank account once again. Bank account, ICICI bank account. And then in the books part, I'm not going to acquire this fixed asset for the tax act and local gap book. I just want to remove it. See here, I'm removing this two. I'm not using these two books. I'm only acquiring it for this one book called as Companies Act book. For the other two books, the asset will not be acquired. For that, you have to separately post entries. If you have to acquire that asset, we'll see how we have to post it, and we'll post it anyway. So for the Companies Act, I'm acquiring, or you can link one book here, like the local gap book. You can link it since you don't have any other source for it. So I'm linking this local gap book, but not the tax act book. Okay. So now this asset is being acquired for 5 lakhs, and I linked already the local gap book, and I'll post this one. Post it, and I can go to voucher here to see what the voucher. Here I see only one voucher. The tax act voucher is not posted, or the tax layer voucher is not posted since the link is removed from the journal level. So here I can see fixed asset vehicles is debited for 5 lakhs and bank account is created for 5 lakhs, and both of them are posting into current layer, or when the single voucher is being posted into current layer and no tax layer voucher can be seen here. As well as local gap is also linked to it, but the local gap transaction will not be posted right into general ledger, so there won't be any financial entry for it. There will be only representation in the fixed asset level. Let's see that. For that we can go to fixed assets again. The second asset that we have acquired, this one, right, bench truck number 2, which we acquired now. Let's go to valuations. You can see our valuations. In the valuations, you can see Companies Act book. There is an acquisition of 5 lakhs. In the local gap book, the acquisition is not posted in the local gap book. Okay, so I think we missed to post the amount. That's okay, we'll link it. Actually, in the journal that we have posted, there is something wrong that we have done. Let's go to details. So this is the voucher, right? Let me go to original document where we posted it. So this is the journal where we posted it. I'll go to view details and lines. You can see here we have posted it for 5 lakhs, but when we linked books here, we forgot to give the amount here. Amount in transaction currency as 5 lakhs for local gap. So it is acquired for 0 value in the local gap book. That's the thing. That's okay. We'll make some changes in a while to the local gap as well. So, and you can see the Tax Act book is not at all acquired. You see there is no transaction for acquisition in the Tax Act book. It's empty. You can see for Companies Act 5 lakhs, and we have to have 5 lakhs for the local gap as well. Since we made a mistake, we couldn't see it here. But for the Tax Act, it should be 0 and it is 0. When I go to the books here, if you see the books, for the Companies Act book, you can see that asset status is open, which means it is acquired, and the acquisition price is 5 lakhs. But for the Tax Act book, when you go into the Tax Act book, if you go to the status of the asset, it is not yet acquired. And the acquisition price is showing as the earlier one, what we have given as 1 lakh, but it's not acquired in the Tax Act book. Only in the Companies Act book, the asset is acquired. In the Tax Act book, it is not yet acquired. So in order to acquire the asset in the Tax Act book as well, we can go and post the transaction again using the new journal that we have created for the Tax Act. So you can also do in that way. But if you link in the derived books, usually the same amount will be posted to Tax Act as well automatically. If you are not linking in the derived books, or if you are removing the link of the books, then you might have to post 2 transactions of acquisition for the same fixed assets for 2 different books. So that's how here the asset status is not yet acquired. Let's see how we can post or acquire a fixed asset once again into the Tax Act. Okay. So for that, you have to go to fixed asset journal again, create a new journal batch, and select this one, fixed asset Tax Act journal, since we are going to post it for the tax book. Okay, then go to lines, acquisition, account, bench truck number 2. So which book? So automatically you can see Tax Act book here, because that journal is having tax layer and this book is also having tax layer. So both are matched. Automatically that only book will show up here in the Tax Act book. How much amount it is? 5 lakhs, right? So 5 lakhs. Offset account is automatically taking as cash account from the posting profile level. Since in the posting profile we have given this offset account, right? Tax Act book vehicles 1 lakh account. So that is automatically being considered here. If you don't want to change it, you can let it be as is. If you want to change it, you can change it. But since it's Tax Act, there is no requirement for all these assets, what accounts, what we are selecting and all, or what is it is impacting, and generally for representation sake only we use them. Again, you can see that linked books, if there are any. Companies Act book is linked for 5 lakhs, but we have already acquired it for in the Companies Act book, right? So there is no point of posting one more 5 lakhs transaction in the Companies Act book. It is since it is already acquired for 5 lakhs. So you can remove Companies Act book. But the local gap book, let us link it. Last time we missed it, right? Posting that 5 lakhs amount. Here I'll give this local gap 5 lakhs, and this time I should see that entry in the local gap as well. So earlier it was posted for 0, so this time I'm posting it for 5 lakhs. So posting it for 1st of January again. Same fixed asset tax journal 001 acquisition, same vehicle, 5 lakhs. Book selected is Tax Act book, not Companies Act book. Then I can post it. Let's see if it doesn't end up with any error. It's good. It is posted, as you can see here. And if you go to voucher now, you can see the voucher is posted into tax layer, not into current layer, because current layer you have already acquired it. So fixed asset account is debited with 5 lakhs, 1,60,000 account. Cash account is created with 5 lakhs. Perfect. Now you can again go to the same fixed asset number 2, vehicle number 2. Select the valuations. You can see now 5 lakhs in all the books. Companies Act, Local Gap, and Tax Act. If you click on these 5 lakhs, you can see the transaction posted. FATJ 0001. So this is the acquisition transaction posted through Tax Act book or through Tax Act journal. This one is posted through Companies Act journal. You have some other voucher name here, FAJ 000002. So that's how you can post different transactions or two different times into Companies Act and Tax Act. The single fixed asset can be maintained in multiple ways using these books, and you can post different kind of transactions into these books. So that's one way. One more example actually. See here, since we have one or two assets, we acquired it okay. But what if I have to acquire 100 assets at a time? See here, I have created 100 assets or uploaded a template which created 100 assets, let's say suppose, or a bunch of assets. What if I have to acquire post acquisition entries for all the fixed assets at a time? Do I have to manually select each and every line and create each and every line and all? Not actually. You can use a separate process called as proposal, acquisition proposal, through which you can acquire multiple fixed assets at a time. Let's say suppose let's create one or two examples or assets here. I'm creating one fixed asset here using this group, furniture group, let's say. FA furniture. So furniture number one is selected. I'm giving it as chairs. It's a tangible asset and I'm giving some ton quantity of chairs, for example. Unit of measure pieces. Sorry, it should be P. Okay. I just created this fixed asset furniture. Save it. Once you save it, you see the name FUR001. Chairs is the first fixed asset. And if I go to books, I'll see the books already linked to it. Companies Act book as well as Tax Act book. So for the Companies Act book, I'll give the acquisition date as 1st of January only, and the total shares price is something like 10,000. Okay, and they can also give a scrap value like 500 is the scrap value, and it is 3 years service life. Okay, 36 periods means 36 months. Then in the Tax Act book as well, I'll give the same details. So the acquisition date is 1st of January. Acquisition price is 10,000 and scrap value is 500, 5% value. Okay. So rest all are same. There is nothing to change. This is in the Companies Act book and this is in the Tax Act book. I gave the same values for this fixed asset. After that, I'm going to create one more fixed asset, furnitures only. I'll just click on new, select the same furniture group, furniture number 2. So this one I will select it as sofa set. Okay. Sofa set. Just give the name. Then tangible asset. Yeah, okay. And it's, let's say it's 4 pieces of sofa set and 4 pieces. And I'll just save it. It's not required that you have to give these details, but it's good when you give it. Furniture number 2, sofa set is one another fixed asset. So if I go to books, I can again see that books here, Companies Act book as well as Tax Act book showing for this. These two are showing here because for the fixed asset group we have linked these books, Tax Act and Companies Act. But local gap we did not link it for furniture. That's why we don't see that book here. That's okay. For this one, again I'll give 1st of January and the acquisition price I'll give as some 20,000. And I'll give this expected scrap value as 1,000. So total 3 p.m. Again, it is only for 3 years service life. Tax Act book. So again, you have this acquisition date 1st of January. And then acquisition price again is 20,000. Then you can give the scrap value as 1,000 and save it. Okay. Now we have two fixed assets, furniture 1 and furniture 2. You can rearrange them, furniture 1 and furniture 2, which are just created. They are not acquired yet. So we have 10,000 value for chairs and 20,000 value for sofa set. Let's say like this, there are some 10 assets which has to be acquired at a time. So in that case, what we can do is we can use a acquisition proposal option in order to bring all the lines of acquisition into a single journal. So how we can do it? We'll see here. Here Under fixed assets, under journal entries, we have this option called as create acquisition proposal. So click on create acquisition proposal. So you can select which layer you want to acquire them, current layer or tax layer. So let's say current layer. Okay, which journal name, fixed asset journal. For current layer, we have only one journal, right? So that's the journal name. So which assets you want to acquire? If you want to acquire, say, particular assets, you can give asset numbers in the filter. Or if you want to acquire assets from a particular group, which are just created and not in the not yet acquired status. Here, the assets that are in the status of not yet acquired are only considered for the acquisition. Okay, you can select a asset number, or you can also select an asset group if you want to reduce the assets that you are going to acquire, or if you are going to acquire assets only from a particular group. You can also give a book, either it's a Companies Act book or the Tax Act book, up to you. You can give a specific book as well, but I'm not giving anything else except this one. I'm only going to acquire the assets which are in the not yet acquired state. There are two assets as we know, sofa set and chairs. So both of them I'm going to acquire. So I'll just click on create journal. You can also run it in the background. Every month or every year you can sorry, every month or every 15 days you can acquire fixed assets. You can give the details and it will automatically create a journal in the. You can also run it in the background. Now also you can run it in the background for once, or you can keep a recurrence so that it will run for every day or every 2 or 3 days according to the recurrence pattern that you give. But anyway, I'm not using the batch job. I'm just running it on the screen. Click on create journal. So it will process, it will read the assets that are in the not yet acquired state and create a journal. So here it is, operation completed. Journal number 95 has been created. So let's go here into the fixed asset journal. So you can see the lines in the journal that is created. You can see here automatically for the 1st of January, whatever the acquisition date that you have given in the books or the Companies Act book, that's considered here. Since the transaction is acquisition and you have run the acquisition proposal, you can see that here. And the two assets, furniture 1 and furniture 2, which are not yet acquired, are considered here into the lines. The book is considered, and the amounts that you gave in the books of fixed asset, 10,000 and 20,000, are also considered as a debit value. And offset is not taken, since in the posting profile you did not give any offset account for Companies Act book, but if you have given any offset account, it would have defaulted here in the offset as well. But for acquisition, we thought like offset account could be anything, not just a single account all the time. So you can give a bank account or make any ledger account as you wish. So bank account, select ICICI bank account, select this one. So in this manner, actually, you can acquire fixed asset, or you can acquire multiple fixed assets at a time in this manner. Once you run the proposal, all the assets that are in the not yet acquired status will show up lines here, just like these two lines are created here. And offset accounts you can assign, or if you give an offset account here in the posting profile, that would automatically default to here in the journal level as well. So this is how what we can run acquisition proposal. Again, you can also see the Tax Act book definitely linked here, because it is through derived books we have the Tax Act book linked here, right? So that the Tax Act book is also showing up here. Again, for here, this asset, sofa set, there is the Tax Act book with 20,000 amount automatically linked. So this is one way we can acquire multiple fixed assets at a time by running the proposal. Or you can also run the proposal from here as well. You can create a journal normally, and without lines you can come here to the proposal. From here also you can run acquisition proposal. It will open the same menu, earlier menu only, it will again open. Suppose let's do that again. I'll delete this two from here. Okay, let's assume there are no lines. We just created a journal and opened the journal. Let's go to proposals, and here you can create acquisition proposal. So fixed asset, book, not at acquired, current. Since we have selected already journal name and all, it won't ask you for the journal name again here in this page. So you can click on OK. So automatically those two lines are created again. 1st of January, assets 10,000, 20,000, and you can select the offset accounts again. So once you acquire them again, they don't show up because they will change the status to acquired assets. Not at acquired will be changed to open assets. So that is why you don't see them again in the list. So we have already other two assets, right? That Benji truck 1 and 2, but they don't show up here because they're already acquired. So and again you can see the books tax act is linked anyway, and here also the tax act book is linked anyway. Some people will link the tax act book and post transactions along with the company's act book. But some people will separately post tax act transactions using the tax act journal. So they don't have the derived books link for any transaction of fixed assets. They'll maintain both of them separately and post transactions separately into both the journals for each same asset, but they post different transactions. That's all. Now I will post this one. Both of them are posted. This is voucher number 3. You can see the voucher. Both current act and tax act should show up actually. Yeah. Furniture debited with 10,000. Bank account created with 10,000. So this is posting layer is current layer. And furniture account is debited 10,000. Cash is created. So that is into tax layer. Two vouchers are posted. One into current layer and one into tax layer. Then for the same sofa set as well, you can see the same actually. 20,000, 20,000, 20,000 and 20,000. One into current layer and another into tax layer. That's how. Now if you go back, these two assets would have been also acquired. So you can go to fixed assets. You can see these two are also acquired. If you go to charts and go to valuations here, you'll only see two books since only two books are linked to it. Acquisition amount 10,000. Tax act also there is acquisition amount of 10,000. And you can also go to books here where you can see company's act book is open, and for the tax act book also the asset status is changed to open since it is acquired. That's up. So in the books level you can see individual balances and profiles. If you click on profile, it will show you the depreciation profile for that company's act book only according to the straight line service life method. And if you click on tax act book and if you click on profile, it will show you the depreciation profile according to tax act reducing balance 20% method that we have given here. So that's how both of them are different. And if you want to see the balances posted into trial balance, I'll just show you in the general ledger module. I'm just going to run the trial balance under the inquiries and reports. See, I'm running it for the tax layer, not the other layers, not the current layer. So I should have run it for the 22nd actually. But its dates are selected as 21st. I'll just change it to 22nd. 1st January 2022 to I'll select 1st January. So 31/1/2022. Should select 1/31/2022. Okay. Tax layer and calculate balances for the month of January. Since we have posted transactions only in January, so you can see cash account is created with 10,30,000, whereas vehicles account is debited with 10 lakhs and furniture account is debited with 30,000. So this is posted into tax layer. In the tax layer, no other accounts are affected as you can see. Only the vouchers that are posted into tax layer are maintained under tax layer. This will not impact the original balances in the current layer. If you want to see these balances in the current layer, So you can change this layer to current layer here and click select. Now you can recalculate balances. So they are posted separately into current layer. There were original balances earlier for different accounts. And again for the vehicles you can see 1 lakh only, and furniture you see 30,000 only. And the bank account is affected with some other amount, right? As you can see here, bank account is created for 1,30,000. This two debited and this is credited for them. So this is in the current layer. So in the current layer, the earlier transactions, what all you have posted can also be seen here. So this is the original layer, and the tax act transactions posted will not be affecting into this layer. That they are separately maintained in the tax layer, which we saw here in this. So that's how. So let's also create one more fixed asset and acquire it quickly using vendor invoice journal and see how it works. Just give me 2 minutes. That's all. I'll create one more fixed assets. Create a new asset using asset group furniture number 3. It's table. Okay. So one piece. You'll see. Call it as piece, single piece. Okay, and save it. Table is created. If you go to books, you can see all the details. It's not yet acquired, and acquisition date is something like 12 and all. Acquisition price and all details are there. I'm not going to give any details here. I'll directly acquire it through a vendor invoice journal, and then it will be automatically updating the details regarding the scrap value and all. We'll come back and give it. Okay. So this asset furniture number 3 is created as table. So to acquire that fixed asset through a vendor invoice journal, I'm going to accounts payable, invoices, invoice journal. It is here. Click on invoice journal. You can create an invoice journal. Click on new, select vendor invoice journal, go to lines. So within this, for which date you are going to acquire the asset, let's say for the 1st of January itself, I'm going to buy that asset. So from which vendor you are going to buy that fixed asset? Let's say I'm going to buy that temple from Tata company. Okay. And you can give an invoice date as well. Let it be the 1st of January itself and the invoice number. So under the invoice, like 8945, I'm buying that table. Here you can give debit amount. Sorry, here vendor is there, right? So you can give credit amount for the vendor of something like 15,000. You're buying the table for 15,000. So the very important thing is offset account has to be selected as the fixed asset account. See, vendor is being credited means asset has to be debited. So for the debiting purpose, we will select the fixed asset here. Offset account type is fixed asset and offset account is table, furniture number 3, whatever we have created. See here, vendor buying it for 15,000 and asset number is furniture number 3. The only significance of using this vendor invoice journal other than fixed asset journal is you can give these terms of payments, you can give the discount if anything applicable, and you can apply taxes as well. So actually, if the taxes is not applicable in the fixed asset journal, in the fixed asset journal, there is no option to apply taxes, but through vendor invoice journal or if you buy it through a purchase order, you can also apply taxes on the invoice that you're posting for the purchase of this particular fixed asset. So I'll remove this cash discount and all. So you can see here, 1st of January, vendor is selected, vendor is credited since during invoice vendor is always credited. And instead of expense account, I'm selecting the fixed asset account, which is being debited for the same 15,000 amount. And you also have taxes applicable. So let's see, it's 15,000 and 12% tax, right? So if you go to sales tax, 12% tax will be calculated. 6 plus 6, total 1800 tax. 15,000 plus 1800 tax is calculated. Or if you feel like the tax should be inclusive of 15,000, you can go back and in the header level you can give that option. The setup amount includes sales tax, so that sales tax amount also will be uh, capitalized. So then you go to lines. Now the invoice amount is 15,000 only. In this 15,000 only, tax amount is also included. So you can see the tax amount here as 803.57, 803.57. Origin amount is excluding the tax amount of in the 15,000. That is the origin amount of the invoice, and this is the tax amount. However, the asset is being debited with 15,000 only now. Okay, tax is also applicable. So now you can validate and post this invoice. So I'm just validating it. So you can also see that fixed asset tab here. We are going to post acquisition only, right? So that is why the transaction type you can see is acquisition here. You can also change the transaction type if you want to. If you can also select acquisition adjustment if you are making any other adjustment to the asset. But since we are posting the original acquisition entry, by first defaultly it will select acquisition. So this is important. You have to ensure that the transaction type is acquisition only here if you are going to acquire it. So now, so selected Tata company and the other details, asset is being debited, and I can post this one. So once posted, what happens is it will create an invoice for the vendor for the amount that you have to pay to the vendor, as well as it will automatically post the acquisition entry for fixed asset as well, since you have linked both vendor and fixed asset here. So first let us see for the vendor in the all vendors. For this vendor Tata company, let's go to transactions here. So you can see the invoice number for 1st of January where it is here 8945 and invoice journal 15,000. So this is showing as an open invoice which you have to make a payment and settle to the vendor later. You have terms of payment like 30 days, right? So after 30 days or within 30 days, you can make a payment and settle the invoice. So that is showing a pending invoice and vendor balance for the vendor since you bought the fixed asset and credit for now. And if you go to your fixed asset module to the fixed assets, the fixed asset number 3 table, if you go to valuations, you can see it is acquired for 13,392.86. The tax amount is excluded actually. It's not capitalized. I think there is a parameter for that to control the tax amount being not included into the original value of fixed asset. However, I think we can also use it. So here out of 15,000, the tax amount of 1,600 something is excluded and the remaining amount is being showing as an acquisition amount for the fixed asset in the two books. And you can also see it in the two books that asset is in the open status now. Open and acquired for this much value, and it is open and acquired for this much value. You can also calculate some scrap value for this on 13,392.86 into 5%, 666.9.64. You can give it here 669.64 something. For the Companies Act also you can give the same value. 669. Okay, that's how you can see the status as open and acquisition date and acquisition price as so. The same way for the Tax Act book as well. Acquisition date and acquisition price. All good. And you can also see the transaction that is posted here under transactions. This is the acquisition transaction, and you can go to details, vendor invoice journal. You can see voucher. So you can see furniture is bought for 1390 something. Sales tax receivable account is debited for 803 and 803, and accounts receivable account is credited for 1500. But however, for the tax act, as you see it here, for the tax layer, the same furniture account is taken and cash account is taken and the amount is considered. There is no applicability of taxes or accounts payable account coming into picture. The offset account cash is being taken from the posting profile. It's only for the representation's sake this voucher is posted. But for the Companies Act, this is the original voucher which affects the tax balances as well. Furniture debited, sales tax receivable is credited, and accounts payable is also credited. Sometimes they don't capitalize sales tax since they have to pay it back to the sales tax authority and they don't want to show it on the fixed asset. But however, yes, fixed asset value can also be added with the sales tax amount, and some people will show that. But most of the times, the net balance excluding the sales tax amount is only capitalized. That's it. So this is how we can also acquire a fixed asset through vendor invoice journal. In the next class, when we're gonna meet, we'll discuss about how to acquire a fixed assets through purchase order invoice, and in case through general journal, and then through inventory to fixed asset journal, how to convert an existing inventory into fixed asset. These are the scenarios we are going to cover. And later we will cover the depreciation, how to depreciate a fixed asset, and how to depreciate multiple fixed assets at a time. After that, we're going to discuss about the disposal or sale of fixed assets, and then different other options available in the fixed assets like transfer of assets, splitting of fixed asset, revaluations and all, and change the group fixed asset groups and all, and then the inquiries and reports and parameters. Then for today, that would be all.